Unexpected disruption and disaster can be stressful and expensive for your business. Thankfully, insurance can help protect you against specific risks. But how does it work? You pay premiums to an insurance company, often monthly or once a year, and the insurance company promises to help if something goes wrong, like paying for repairs, replacement, or covering costs. Common risks include natural disasters like floods, fire, and earthquakes, theft of things, equipment, stock damage, loss in transit, IT crime or hacking, injury or property damage caused by product or services, product recall, employment dispute, or a health and safety breach. No single policy can cover all your business risks, so it's likely you'll need more than one. So let's talk about the most common policies. Asset insurance can cover theft and damaged items you own or use for work, like computers, furniture, tools, and stock. There are two main types. Indemnity is the most common policy type, which takes wear and tear into account when paying your claim. The other is replacement, which pays the full cost of replacing an item. Commercial property is one of the most common forms of business insurance. It covers damage to buildings you own from things like fire and flooding, and sometimes earthquakes. Business interruption covers you against losses resulting from an interruption to your business for agreed periods when you can't trade but still have costs, like paying wages and rent. You might make a claim if your business has to close unexpectedly, which might happen after a natural disaster. Liability insurance is useful if you do work for other organisations. It covers the costs if an organisation sues you or one of your employees. There are several types of liability insurance, but we recommend that all businesses and self-employed have the most basic general liability cover. Cybersecurity insurance is a broad area covering data breaches, website hacking, and IT scams. Make sure the policy you choose covers your areas of risk. There are many other types of insurance that may apply to you, depending on what industry you're in, including marine insurance, travel insurance, transit insurance, product recall, and trade credit. We've included more details about these in the learning summary. Even if you're just starting out, it's a good idea to start thinking about your insurance needs right away. Even if these needs are very basic, it's always a good idea to review your needs each year to make sure your growth and changes are taken into account. And when setting your insurance budget, think about the costs of not having the right cover and how that could negatively impact your business. When it comes to making a decision, here are some of the pitfalls to avoid. Not reviewing the sums insured. Make sure you review how much you need to cover at least annually or after any major changes to your business. Not telling your insurer about important changes, like to your business model. You can't claim for something that's not covered in your policies. Not telling your insurer the whole truth. For example, a legal issue you didn't mention. Keeping back crucial information can lead to a rejected claim. Not getting advice. Insurance is a specialist area, and many people wrongly assume they can get one policy or a package of policies that covers all their business activities. This isn't the case. Insurance policies often use specific, complex, and even confusing language, so an insurance broker can help you unpick anything that's unclear and help you understand what a policy does and doesn't cover to find the policy that suits you.